Dear traders, ladies and gentlemen, welcome. This is another episode of the MCA Trading Made Simple series. We explain some of the most important concepts in a very simple manner for the ones who don't have much time to go through all the details and who just want to have like the general knowledge. This is a great way to start. Of course, if you want to go really into detail, get the MK video course. There you find really in-depth explanations, examples, etc. Anyways, today we're going to talk about the so-called 4-hour reversals, and this is a very interesting phenomenon. It's very particular to one time frame, namely the 4-hour charts. And if you look at the real-life examples, which we're going to do in a minute, you will see quickly that there's a certain dynamic going on, that the price bounces within some kind of channel back and forth, and of course overall the channel can also get into a trend mode like in the squeeze mode we discussed last time, but we call those phenomena here 4-hour reversals. Okay, when the price literally reverses at those 4-hour channel bands, and we're going to go into detail why that happens. Okay, so what's going on? In a way, this dynamic on the 4-hour chart shows you that the smart money algorithms are very focused on misleading the dumb money and taking out the dumb money that is already trapped. So let's go into detail. Yeah, let's say some shorties come to the market. Okay, the smart money pushes the market up against them, takes the stops, retests the high, takes the LTS. So what happens? Those shorties get hunted. Okay, once these shorties have been taken out and no further shorties are entering at a good risk-reward ratio, and then even some longies trying to buy the dip, boom, 4-hour reversal back down. Okay, they're literally doing that all the time. The move goes against all these dumb money buyers. They are into loss as well. They get stopped out. Their stops get hunted. They leave the market. So what happens? Maybe a flat market, maybe a retest of the low, but then eventually, again, dumb money sellers dominating, thinking, you know what, now the market will go down and do a breakout to the downside. So what happens? Boom, 4-hour reversal up against the dumb money sellers, again in an exaggerated way, taking out stops which were accumulated maybe at this high, retesting until those shorties are kicked out. Price goes down, long is coming, trying to buy the dip, and so on and so on. Okay? So this is literally what's going on all the time. And let's look at some real-life examples straight away so we can see that. Yeah, like here, euro dollar. This is basically what's going on. Look at that. Okay. So, price cut. Look, longies were in the market. Yeah. The price goes down against them, they get kicked out. Dumb money switch to shorties, okay? Typical dumb money switch. So the dumb money first tried to buy and got killed, and then the dumb money tries to sell, and what happens? Boom, okay? 4-hour reversal up against those dumb money sellers. So also the sellers get kicked out, okay? Then what happens? Dumb money switch back to longies. So longies think, you know what? Now the market is gonna really do an uptrend. I'm gonna buy the dip. So what happens? Boom, 4-hour move down against those longies. They get kicked out, and so on and so on. And here we see longies came in trying to buy cheaply. So what happens then? Failed reversal, down move against the longies. It's literally happening all the time. Of course, when the squeeze happens, the squeeze then dominates everything. Like here, euro dollar came all the way down because the longies created the squeeze. Yeah. Now let's go a bit more to detail. Yes, in the squeeze indicator, if you see the dumb money switch and then you see also a collapse, like here for example, I mean here the collapse was earlier, so the shorties already collapsed. So dumb money switch plus a collapse plus retest of the high, that's already a great entry. Yeah. The one indicator I have not explained so far is the net loss indicator here, and this is the third factor you should take into account with 4-hour reversals. So we're going to dedicate a separate video just to the net loss indicator because it's so important and because it really gives you the final proof that the money overall always loses. But actually, let's elaborate a little bit here while we are at it. So you see when the red line goes above the middle line, this yellow area appears. It means some shorties are into profit. So that's another factor. Look, here we have all three, okay? The low has been retested. We have a dumb money switch from longies to shorties. We have the collapse of the longies and the shorties being in the yellow profit area. Therefore, complete for our reversal up, okay? This is a situation where you can buy and hold, okay? Especially if more shorties come in. We come to that in a second. So those three factors, or four factors, they allow you to trade the 4-hour reversal outright, okay? If you have the down money switch, you have the squeeze line collapse, and you have the net loss reversal and the retest of the higher or low, and then the price bouncing back above the lower band, or for a short below the lower upper band. That's a trade where you can trade and hold. Okay, just take into account some news. Okay, so the 4-hour reversal dynamic is related also to the net loss indicator. Literally, as soon as some of the shorties get into profit, they want to do a reversal up, and if the longies would get into profit and would get above the middle line, they would do a reversal move down. Yeah, like here you see the longies got a bit more towards the profit. They didn't get into profit, but they moved towards it. So after the 4-hour reversal, the longies are again in drawdown because of the down move. Okay. This is really powerful, and you should always check it when you trade. What phase are you in? Okay. Is the market in a 4-hour reversal move down? So what are you doing? If you even do a short-term scalps, be aware. If you are in the direction of 4-hour reversal, you may be able to trade and hold longer. Yeah. That's why we do multi-time frame analysis. Okay, let's go a little bit more into detail. I've made this diagram in one of the main videos on this channel, and I encourage you to watch all that. It's a little older, but it's all completely valid still. You could argue that, yeah, for example, if the price goes down and you have longies coming in, and again, these are fueling position bars. Okay, the longies are fueling the down move, so it doesn't only go to the middle, but even to the opposite band. Okay? So they are fueling the 4-hour reversal. Then sometimes we have blocking position bars, which means, let's say the price comes down, but then suddenly you have big shorties coming in. These are often the situations where the price goes maybe to the middle of the band, but then starts to reverse up again. You see? So the position bars, the dumb money, the shorties here block a further down move. Okay? If these would be longies, they would be fueling a down move. But here they're blocking. Okay? And then you could even also identify procrastination position bars, like I wrote here. Can win if smart money conducts an SDS run in trend direction, and or if the smart money cleans up before reversing, luring. Okay? This is when the dumb money tolerance is higher. So these sellers can be in the dumb money tolerance. You have to be careful. You cannot just trade against them. Yeah? That's basically the situation when you have a squeeze. So let's say you have a squeeze against the dumb money longies. Okay, there are loads of dumb money longies in the market. If then a few dumb money sellers come in, they're allowed to win. They're within the dumb money tolerance. Okay, so they're only procrastinating the down move because they will not immediately go down and let them win. They will at least go sideways. However, eventually they will let them win. You understand? If you go to the recent video about dumb money tolerance, the procrastination position bars are within the dumb money tolerance in a squeeze mode. So in a squeeze against the longies, those are some shorties that are allowed to win. And note, like I wrote here, these are very expensive entries of those little dumb money traders. But, you know, they were lucky because they were trading against the dumb money longie squeeze. Okay, squeeze against the longies. You understand? So this is basically the squeeze scenario. But whenever you don't have a squeeze scenario going on, yeah, the base case is literally the 4-hour reversals. They're literally going back and forth all the time. Yeah. I mean, so if you think in terms of that, and we have other examples here. Let me just download one here. This is powerful. Yeah. So here, for example, we see This is silver, but it's the same principle. Okay, you see, so for our reversal, 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 okay? Then squeeze mode, you see? Longies are dominating, squeeze, so they go down, down, down. Don't try to trade a for our reversal against the squeeze. The squeeze will always dominate, okay? The squeeze will dominate a for our reversal, okay? Very important rule, yeah? Okay, so that's it for now. If you want more details about that, get the video course and get really and study the videos I've posted there. These are not publicly available, but here you have a nice summary of that very important phenomenon. Lots of love.